All right, everybody. It is Monday, December 10th, 2018, and here we go again. Lots of stuff to talk about this morning, as usual. Some of it almost comical, and we're going to cover that as well. Let's start off with this. As I am doing this video blog, stocks are under pressure again. The Dow Jones Industrial Average is down just about 200 points. This should not be a surprise to you. In my market report that I did yesterday, Markets A Look Ahead, I explained to you, and it should be clear already, that I was not convinced that the selling is over. I don't think it is. And a lot of people keep writing to me about this. Greg, is this a bottom? Greg, is this a bottom? No, I don't think it is a bottom. We need to be very cautious here. There's, again, the geopolitical front. I'm referring specifically to this trade war, trade truce, whatever the hell it is. No one even really knows what it is, and that's what's weighing on this market right now. There's more rhetoric coming out of China, coming out of the U.S., the Trump administration regarding this trade war, and the market doesn't like it. This should be evident, and that's in large part. I mean, you can look at the yield curve, which I want to talk about too, and that's where this is going to get kind of stupidly funny. But the main thing weighing on this market is this trade war. I mean, this was a setup. It was almost a perfect setup with how they tried, at least, to do this, and it would have worked. Worked in, what I mean by that is to keep this market faker for longer. Seriously, and let's cover that real quick. Again, we had the Trump Powell put that was set up under this market, more easy money pouring in here. That was stage one. Stage two was supposed to be, setting up this whole thing with the truce. And then all of a sudden, we find out that the truce really wasn't a truce. Everything is kind of falling apart. So stage two didn't work. And we're seeing the fallout here. All right. So let's look at a few other things here and talk about how stupid certain things are. If you were to turn on the mainstream C.O.D channels, the Confederacy of Very Nice People, you know who they are. If you recall, it's just laughable. Last week, part of the week before that, they were talking about the yield curve, the inversion in the yield curve. How it's predicting something bad coming down the pike. Now all of a sudden today, oh no, they want you to think that the yield curve doesn't matter. Oh no, it doesn't matter. That we have a partial inversion. The entire curve seems to be sloping, pointing towards a full-on inversion. Tens below twos. No, don't worry about it. It's fine. It's an incredible situation. You almost have to laugh. But that's what they do. They parade these people out. They put a script in front of them, and they tell them what to read. It's almost beyond belief, and you cannot make this stuff up, even if you tried. It's the truth. So I want to address one more issue that someone commented on my video yesterday. Greg, now you're recommending cryptos? Where did you get that from? Unless you're trolling. I did not recommend cryptos. I am not recommending cryptocurrencies. I did say if you want to use cryptos as kind of a measure of risk with regard to the stock market, you should watch the price action. So take whatever's stuck in your ears and remove it and listen to what I'm actually saying. It drives me nuts. I am not recommending cryptocurrencies here. I think they're going to remain under pressure for a while. This whole environment we are in right now has to be, put into a perspective. Number one, and you know this better than anybody else on this web, it's fake from the top down, upside down, backwards, and sideways. So with that said, we have to be very, very cautious here. If you noticed, I have not added a single position to my portfolio. You can see my entire portfolio of credit spreads right now. Go to my website, traderschoice.net. There's a link in the description of this video, left side of the page. Those are, if you're going to go there, those are all my current updated positions there. I was just looking at a whole bunch of equities, and there's nothing here that says to me right now we need to buy or get involved. I think it's time for people to step back from this market, let the geopolitical events play out, let everything play out right now. There's no reason to get involved in this market right now and increase your risk, in my opinion. I just don't think so. Let's talk about a few other things here. The dollar is markedly stronger right now. This is putting pressure on gold and silver. Cryptocurrencies are down. I addressed that earlier. That rift in the yield curve is still existing. Bonds are being bought up. So that's where we are. Caution. That's all I have to say right here. Not panic, like I've explained to all you people last week. There's no reason to panic in this market. If you do that, you're going to get yourself in trouble. You sit back, you evaluate your situation, and you take the appropriate action. Never, ever panic. Anyway, so right now, let's keep our eyes on this market. You know exactly what you should be looking at, and that is, in fact, the bond market. So ignore the retards, I don't know another way to put it, and I'm sorry to actually say it that way, on the Confederacy of Dunces, and they're trying to tell you now that you should not really be looking at the yield curve because, you know, it's not that important. Although everything prices off of the bond market action stocks, although the yield curve has predicted the last X recessions, every single one of them, by the way. So, but, you know, don't worry too much about the yield curve, according to them. That means you should be focusing on it like a laser. You know that. Do the opposite of what the C.O.D tells you to do, and you, my friends, will be a lot better off. I'll see you at the end of the day. We'll sum this up. It is going to be interesting.